Hey, it's the Keiser Report. I'm Max Keiser. On this show, as you know, we've been recommending that authorities around the world find these bankers, arrest them, throw them in jail, prosecute them, and in some cases apply capital punishment. Okay, maybe a little harsh, but I say for crimes against capital, should be considered. Let's get right to it, shall we? Markets, finance, and scandal. Stacy Herbert.
Max Keiser. Well, before I get into all the bankers on the run, I wanted to talk about capital punishment in a way. JP Morgan, gold could now face unlimited demand.
What?
As you know, as the entire global fiat currency grid is unwinding and collapsing.
As we predicted.
And there's extreme volatility. Everybody is seeking safe haven in gold. As we see from these charts, you see them going up and up and up and up.
Gold is going higher.
And why is gold going higher? Not only because of central banks printing so much money, because also there's just been so much fraud. And the bankers are now on the run and in custody. So first headline, Interpol hunts former Kaupthing chief Sigurdur Einarsson. As you can see from these pictures, Interpol is looking for him. They are seeking him on suspicion of forgery and fraud, but most interestingly, on counterfeiting.
Counterfeiting, very interesting. Because, Stacy Herbert, let me point this out to the global audience watching RT right now. Naked short selling is counterfeiting. So these scandals where people say, well, we were selling short naked those bonds, it is the equivalent of counterfeiting. If you're selling something that doesn't exist, which is what a naked short sale is, that's counterfeiting. So it's fantastic that the authorities have finally caught up to this basic premise of counterfeiting equals naked short selling. And this, of course, means that many, many bankers will soon be behind bars and that gold will probably triple from here.
If you recall, Iceland's three main banks went bankrupt. They went bust. They collapsed, owning 12 times the nation's GDP. Now, after Kaupthing's loan book was leaked onto the internet last August, it showed key shareholders and owners were the bank's main borrowers.
Yes, they were lending to themselves.
They were lending to themselves.
And then they asked themselves, should I lend more money to myself? And they told themselves, yes, you should borrow some more money from yourself. So they lent themselves some more money. Then they continued to do this until they loaned themselves 12 times the entire country's GDP.
And 2/3 of Kaupthing's clients were based in London. And that brings me back to the Interpol poster, and they ask if you have any information for Sigurdur Einarsson, contact your national or local police or the General Secretariat of Interpol. And all of us, we can go online, you could just click that little button, General Secretariat of Interpol, and it takes you to a little page where you could fill it in, just like we have Keiser Report. He's in London.
I tell you what, I'll give 1 gold ounce coin to the first person that spots this guy. I'll give a reward. I'm giving you a reward. Max Keiser giving you a reward. 1 ounce of pure gold if you're the person that's attributed in the press as having caught this no-good-nick, this Icelandic banking terrorist.
Bankers are on the run in New York, too. Wall Street bank probes widening, report says. Apparently, there are preliminary criminal investigations going on into these banks, JP Morgan, Citigroup, Deutsche Bank, and UBS.
Yeah. Well, each one of those is, I think, interesting because they have committed fraud and financial terrorism in their own unique way. And I think for a connoisseur of financial terrorism, you really deserve studying each individual case. And this will make a fantastic, I think, huge, epic look-back novel, if you will, that I'm working on myself right now.
But these are just, billion-dollar trades that are being investigated. Now, the SEC is looking into these formally. But this takes me to the next headline about the bigger act of financial terrorism. Watchdog, Treasury lax with record and bank talks. So the Treasury apparently failed to keep meeting minutes or notes from phone calls with banks that received money from its $700 billion financial bailout, said Neil Barofsky, the Special Inspector General for the Bailout Fund.
Because they were committing fraud.
So they kept no records, no public records. Nobody knows what he said to the various bankers who are now under investigation for criminal acts in another arena that actually stoked this whole crisis.
It's racketeering. You see, in racketeering, you need that kind of cooperation and collusion for the rackets to profit as they are. And, of course, the rackets are milking the system wholesale currently with all kinds of new scams, which I believe you're going to be getting into right now.
Headline reads, "Perfect Quarter at 4 U.S. banks shows Fed-fueled revival." So Bank of America, J.P. Morgan Chase, and Goldman Sachs all said in regulatory filings that they had 0 days of trading losses in the first quarter. Now, we covered Goldman Sachs on the previous episode, but this is now more banks are coming out that they all had perfect quarters.
Because it's collusion. You see, if only one bank had done this, it would have been obviously a situation of fraud. As Carl Denninger points out on his blog, the chance of flipping heads for 61 or 62 days in a row, as these banks have done, for just one of these banks, is slightly under 1 chance in a trillion. You've got a 40 times greater chance of getting hit by lightning than turning in the quarterly performance of just one of these banks. Now, several banks have done this exact same thing. Right.
Well, some are blaming the proprietary trading and how this is a statistical improbability. However, others are also pointing out that it is really underscoring how the government support and less competition is actually encouraging these perfect scores. So the trading profits of the street is just another way of measuring the subsidy the Fed is giving to the banks. It's a transfer from savers to banks, says Christopher Whalen, Managing Director of Institutional Risk Analyst. So he's saying that the Fed is giving money to these banks at 0%, and all they're doing is just buying treasury bonds at yielding like 3.8%. And you can see this from the chart. This is from the Federal Reserve itself, and this is showing the number of government securities held on banks' balance sheets, and it is skyrocketing. As you see, it's straight up. All they're doing is taking free money from you, the taxpayer, and then loaning it back to you, the taxpayer, at a premium.
Yeah, well, also, I looked into this a little bit myself, and it used to be, Stacy Herbert, that at the end of the year, if you had a losing trade, you had figured out a way to dump it. I mean, I remember when I was working as a stockbroker, we had a thing called going short against the box, which was perfectly legal at the time. You're selling short security as a way to defer taxes into the next year, et cetera. But now what's going on Wall Street is that within 5 or 10 minutes of making a bad trade, you realize you've made a bad trade, and you immediately dump it into the government's balance sheet, and they wash it almost in real time. This is real-time fraud. The entire New York Stock Exchange ticker tape is just a live quotation of fraud. GS, Goldman Sachs, J.P. Morgan, Citigroup. It's just fraud, 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 fraud. It's all fraud. There's not a single legitimate transaction on Wall Street today. It is complete and utter fraud.
Well, it also brings up the notion of so many American states are in debt and almost bankrupt. They allege that the Social Security system are bankrupt. Well, if this is a measure by which the U.S. government is trying to help the bank's balance sheets, why don't they just do the same thing as lend to all the old people, the pensioners, and let them lend back to us?
Well, they could have. As we've pointed out on this show before, at the end of 2008, during the transition into Obama year, they could have very simply spent the exact same amount of money clearing every mortgage debt and credit card debt in America, and they would have taken care of all the problems, and they would be on their way to growth. But instead, they used that 11 to 12 or 13 trillion dollars to pay their buddies on Wall Street, who did not, in turn, make those funds available to Main Street, who are still struggling, and while Wall Street has still got their gun to the head of Congress asking for even more bailouts.
Well, I mentioned the bankrupt states. This brings me to the headline. Schwarzenegger warns of terrible cuts, absolutely terrible cuts, coming in California. So we've seen the austerity measures sweeping through Europe, and the response has been quite visual, let's say. And Schwarzenegger says, it's coming to California. What you can expect generally is no taxes and terrible cuts, absolutely terrible cuts. We're not going to get through the deficit we have without some really tough decisions and some really terrible cuts.
I heard California is going to be saved by Joe Wiesenthal over there at BusinessInsider.com, who's going to be trading Cantor Fitzgerald box office futures contracts until he saves California himself. Now, this guy, Joe Wiesenthal, who's been a guest on our show, he put out an editorial yesterday saying, would you rather have a bank that is betting against you or a bank that's going bankrupt? What he's saying is he's legitimizing the mafia mentality. Give us your money or we'll break your leg. That's what the banks are saying. And Joe Wiesenthal over there at BusinessInsider.com is legitimizing leg breaking and mafia activity in the bank, saying, well, it's better than being beaten up by the bank. Joe, shame on you.
Okay, well, let's go back to California and the banks. It takes me to another headline, actually, from Business Insider. Wow, California now one of the top 10 government default risks in the world. This is according to those credit default swap traders, the speculators attacking Germany, attacking Greece, attacking Spain, attacking all the countries of the world. Well, this is the latest chart you're looking at here from the week of May 11th. And California has now cracked the top 10 with a 20% default probability. At the top of the list, you see Venezuela with a 50% chance. And just to put it into context, there in the middle is Greece with a 34% chance of default.
Well, unlike Arnold Schwarzenegger, California ain't never coming back.
And I want to bring to these final headlines here. And regarding these credit default swap speculators, here's a headline regarding Angela Merkel. ECB paralysis rattles markets as debt costs hit new highs. So German Chancellor Angela Merkel is quoted in this article saying that she's attacking the financial industry for playing dirty. She said, first, the banks failed, forcing states to carry out rescue operations, forcing them, right? They plunged the global economy over the precipice, and we had to launch recovery packages, which increased our debts, and now they are speculating against these debts. That is very treacherous. Governments must regain supremacy. It is a fight against the markets, and I am determined to win this fight.
Governments ain't gaining supremacy, Merkel.
But this is the notion that you used to call them financial terrorists, is you don't negotiate with terrorists. They negotiated with them in the first place. As she admits, she's saying states were forced to carry out rescue operations. They shouldn't have done that, and if they hadn't done that, then they wouldn't be in the situation now, where they're now defending their own existence.
Yeah. Well, as I've said in the past, if Osama bin Laden were the Federal Reserve chairman in Washington, D.C., he would be doing less damage than Ben Bernanke. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, because when we come back, I've got Jimmy Rogers.
Of particular faces form the face of a country. RT presents to you the entire variety of peoples inhabiting Russia.
Welcome back to the Keiser Report. Time to welcome to the show Jim Rogers, legendary investor and author of Investment Biker, Around the World with Jim Rogers. Jim, welcome to the Keiser Report.
I am delighted to be here.
Jim Rogers, governments around the world are vowing to deal harshly with speculators with shorting their debt and or currencies. Who's going to win this fight?
Well, the market has a lot more money than any government or any central bank, and in the end, the market's going to come out way ahead. They can sit and fight all they want, but unfortunately for them, the market will win, and it always does.
All right, so somebody wrote a comment here that I thought was interesting. Goldman Sachs can create credit default swaps faster than any government can print money.
That's true. That's exactly right, and governments can default faster than they can create them as well. So no, the market's going to come out ahead in the end. Governments can do foolish things all they want, but in the end, they'll have to pay.
Right. Now, up in Iceland, they're going after the bankers that were at the root of the problems up there. And as part of the prosecution, not only are they talking about fraud and securities violations. But very interestingly, they're mentioning counterfeiting as one of the crimes involved. And some would argue that naked short selling is the same as counterfeiting. Your thoughts?
Well, I have trouble with that. I don't even know how you could possibly say that. In fact, in China right now, they're starting to allow naked short selling. It's interesting. The Chinese are more capitalist than all of us in the West who claim to be capitalists. I'm not quite sure why naked short selling is counterfeiting.
So, in other words, under a normal short sale, you're selling something that you've borrowed in the hopes of buying it back at a lower price and profiting the difference. But in a naked short sale, some would argue that you're actually selling something that doesn't really exist. You're just pushing something into the market that heretofore had no existence.
Well, yes, but you're responsible for it. There's an expression, he who sells what isn't his'n must deliver or go to prison. So you can sell it out there, and if you don't come up with it at the anointed time, you're going to go to jail. I promise you that all the governments these days will put you in jail.
All righty. So now the clearing corporation that tracks the delivery of the short sales, of course, there seems to be some latency in the system, and apparently folks are gaming that system because they're not very good at accounting for everything that's in the system. But let's move on. The Euro TARP. Your thoughts on the nearly €1 trillion European bailout?
Well, I was most surprised. I would say, nay, I was not surprised. I was startled and dumbfounded because it never occurred to me that the Northern Europeans, anyway, would put up with something like that. Angela Merkel herself said many times the West cannot afford to have another situation like we had in 2008. And here, all of a sudden, they're doing it. They're letting people sell bonds that they cannot really justify. They're letting them spend money that they don't have. No, it's going to be a real mess in the end.
Right. I mean, the ECB is really, reincarnation of the Bundesbank. And the Bundesbank, the thought of them engaging in quantitative easing and buying back their own paper, that this seems anathema to every fiber of the soul of the Teutonic being. I mean, this is remarkable, is it not?
That's what I said. I was stunned. I was startled when I saw it happen. I actually owned the euro. I thought they would do something to revive confidence, but it never. Now, obviously, I'm shaken too. I got to figure out what to do because you would never think the Dutch or the Austrians or the Germans or the Finns or some of the people that have always insisted on sound currencies would suddenly go and do something like this.
It is a startling development in the history of certainly Northern European finance. What do you think triggered this insanity?
Well, I suspect it's the same thing that happened in the U.S. The banks called them up and said, listen, we're stuffed with this paper, and you got to bail us out. I mean, the French banks, for instance, have billions of dollars, of euros of this stuff, which means that all the European banks do. And I suspect they called up with the same thing, saying, save me. If you don't save me, it's going to be the demise of European capitalism.
Okay, so a lot of people would call that, finance at the point of a gun, or some have even called it financial terrorism, myself included. But it seems like they're using weapons of mass financial destruction, as Warren Buffett has characterized them, actually to foster political ends, using, credit default swaps and all kinds of other of these derivatives as weapons.
Well, obviously, that's what I mean. They're threatening that's going to bring down Western capitalism, or European capitalism, if they don't do something. What it is, it's really welfare for the rich, socialism for the rich.
All right, Jim Rogers. So what should have been done?
I would have let Greece go bankrupt. Greece is 2% of the European economy, would have caused some turmoil and problems for a while, but in the end, it would have demonstrated that Europe is going to have a sound currency. They're not going to let people run up gigantic debts. They're not going to let people spend money they don't have and lie about it. And in the end, everybody would have been better off. Many people would have rushed in to buy the euro in a scenario like that. Now what they're doing is debasing the euro from within. It's weakening the euro, and it just means that the euro is going to be less strong, in fact, a weak currency, and it's going to have problems down the road. I own the euro. I, for one, am shaken, and I, for one, am trying to figure out what to do. Okay,
so there's a couple of layers here, obviously, because on the European banking system, banks in France and banks in Spain and other places, they own a lot of this Greek paper. So by letting Greek go under, you're talking about removing a huge piece of the balance sheets of some of these European banks. So there's a systemic crisis, and Greece is not isolated in that sense. So there seems to be there needs to be more of a comprehensive approach than simply letting Greece just go bankrupt.
Greece is 2% of the European economy. It would have caused some problems, there's no question. But cast yourself to 5 years from now or 10 years from now, when the debts are even higher, when you've got many more people, when you've got Ireland and Spain, you pick the countries, when you've got a lot more. And then when the market forces you to deal with it because they're not going to put up with it anymore, then you've got the end of the whole thing. You've got the end of the euro, the European economy collapses, and then you've got serious problems.
Sure. Greece is 2% or 3% of the European economy, but they've got debts outstanding in plenty excess to their total GDP, and those debts are owned by various banks. Let me ask you this. On a systemic level, why can't these central banks, to stem the tide of speculation, go after that margin rate and say, we're going to increase the margin rate. We'll leave the discount rate alone, but we're just going to increase the margin rate as a way to drain the system of all the speculation, or some of the speculation?
They could certainly do that, but it's not the speculators who are causing it. The speculators didn't run up debts in Greece. The speculators didn't go out and spend hundreds of billions of dollars that they didn't have. Look, and most of the speculators that are taking money out of Greece are the Greeks. The Greeks can look around and say, hey, we've got a serious problem here in Greece. I'm getting my money out. The speculators, the evil speculators, came along later. They didn't cause the problem. The Greeks were the one who reacted first, and now other people are getting involved. I mean, you could do all sorts of things, but that's not going to change the fact that Greece has run up gigantic debts which they cannot pay.
Yeah, but let's talk for a moment, just for a second here. When Greece, of course, was joining into the euro back in the 2000-2002 period, there was a bit of a now it looks like banks on Wall Street, Goldman Sachs in particular, was instrumental in helping them hide some debts, which would give them a better debt-to-equity profile. So, I'm not sure we can say that they are solely responsible for this problem, because it seems like they were aided and abetted by some of these banks that were interested in getting this whole thing hooked up. And, I mean, does Goldman Sachs perhaps share in some of the blame here?
They were aided and abetted by a lot of people, starting with the Greek parliament, starting with the Greek Treasury Department, which knew what was going on and went to Goldman Sachs and lawyers and lots of bankers and everybody else and said, okay, we've got a problem. We're spending too much money. What do we do? How do we, what do we do about this problem? Parliament approved it. The Prime Minister approved it. The Secretary of the Treasury, Treasury Finance Minister approved it. And Goldman Sachs got involved too. But that's a little bit like, if you go to a doctor and say, I've got a problem, help me solve it, you don't really blame the doctor, usually anyway. You don't blame the lawyer. You usually blame yourself because you sat and drank too much last night.
Okay, but just not to belabor the point, but there in the case of some doctors, like Michael Jackson's doctor, I think he gave a little bit too many drugs and a little bit too much cosmetic surgery, and ultimately, it killed him. But now you mentioned that you're long euros, so I would take it then you see the euro surviving.
I see the euro surviving at the moment. I don't expect there to be a euro in 10 years. Especially when they continue to do things like they're doing now and debasing the currency from within. You'll have to ask me next week, next month, next year. I'm not quite sure what I'm going to do about the euro, because this is a turn of events that I never expected.
So I would imagine gold is going to continue to benefit from the collapse of these various fiat currencies.
Well, I'm long gold. I'm long nearly all commodities, all real assets, because throughout history, when people debase currencies or print money, the way to protect yourself and to profit is to own real assets. So I own gold, I own silver, I own zinc, I own cotton, I own all sorts of stuff.
Let's talk about the IMF for a second, and we have a couple of minutes left. The IMF met last Tuesday to discuss replacing the global exchange system that is U.S. dollar as the reserve currency. So walk us through what you think might be a replacement, if you think that one is possible.
I would have suggested the euro as a replacement 2 weeks ago, because the euro is a big currency and, it's much sounder than the U.S. dollar. Now I'm not sure I would follow through on that. And that leaves the world in a serious predicament, because if there's no replacement for the dollar, what do we do? The yen can't do it. The renminbi can't do it. And now I don't think the euro can do it. So the world's going to search around. Maybe we'll have a basket of currencies. Maybe we'll have a basket based on commodities. The world's got to much more serious problem now than it did even 2 weeks ago.
All righty. Well, Jim Rogers, thanks so much for being on the Keiser Report.
Anytime. Invite me back. Thank you.
All righty. And that's going to do it for this edition of the Keiser Report. I want to thank my guests, Stacy Herbert and Jim Rogers. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.